Hi guys, a very good morning to all for joining us live on this broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. Let me quickly give you a recap of how we left off trade, and seems like that pain continues. Fourth consecutive day of losses that we saw in the markets, and ahead of that election results perhaps are going to be more jittery or even cautious, you can call it. But the Nifty slipping below that 22,800 levels. Market participants are perhaps, today being expiry day as well for the May derivatives contracts. You're going to also have them waiting on the sidelines for the exit polls that will come by at the end of this week. You also have the market breadth at this point, which is pretty much in favor of the declines. If you look at the advanced decline ratio, 3:4 is what we are actually staring at this point. So will the June series bring any respite, or could we expect any kind of change? At least we know till we have this big event out of the way, perhaps it is going to be one of those volatility galore kind of sessions. But we'll ask our experts on the show what they think about it. But before that, let me take you through all the top headlines. Stocks slumped on Wall Street. The Nasdaq saw its worst day in May, while the Dow slipped over 1% as Treasury yields have spiked to 4.6%, the highest level in nearly a month. And stocks in the Asia-Pacific region are also trading lower on weaker cues from Wall Street. The GIFT Nifty is also suggesting a lower start for the Indian equities. Brent crude trades around $83 a barrel as prices remain range-bound ahead of that crucial OPEC meeting on Sunday. Gold prices have slipped as the dollar has strengthened and yields have risen. RBI goes on to impose temporary business restrictions on two Edelweiss Group entities, citing material supervisory concerns as well as breach of regulations. It says that the curbs on the ECL Finance as well as Edelweiss ARC will be lifted once the firms take remedial action. Tata Steel has reported a good fourth quarter. EBITDA per ton is higher than what was expected, while the losses in the European business is the lowest it has seen in 6 quarters. In key earnings to track today, Apollo Hospitals will be reporting its fourth quarter numbers. That's the clock there on your screen, just about 10 minutes to go. But can this, that momentum really fizzling out, we would say, when it comes to what the benchmarks at least have been doing. Fourth consecutive day of losses we saw yesterday, and pretty much the financials and your heavyweights seeing that bit of outflow. But let me take you through the FNOQs as well as the setup of where we've left off yesterday. If you look at the FNOQs, well, the data coming in from the call option side, that one shows that the maximum call open interest was now seen at about that 23,500 strike, and this perhaps will act as that resistance level, although we are far from that 23,000 psychological barrier now that we've slipped down further. Whereas on the put side, we did see 22,000 strike holding on to that maximum open interest, which will perhaps be that support level, although the immediate support level could be somewhere around 22,600 if we further slip down from where we left off yesterday. So which is why when you look at the put call ratio, that one which really suggests what the market sentiment is, that one is inching closer towards that 0.5 0.7 levels. Now what happens here? Actually yesterday it declined to about 0.79 versus the 0.94 levels in the previous session. And remember, when this ratio falls below the 0.7 or 0.5 level, it indicates that they are selling, that there is more selling in the call, which is higher than the selling in the put side, which pretty much is that bearish sentiment that is trickling into the street. Now if you look at the volatility index too, that one is above that 24 mark for another session when it closed on Wednesday, and it is likely to remain at these elevated levels. We know that until the event outcome, but it has achieved some bit of stability, we would say, because the fluctuation is rather small in the previous session, at least from that sharp fall that it had seen previously. Now the India VIX did decline by just about 0.08% at 24.18 is where it stands versus the 24.20 levels where it was. Now in terms of the stocks, that everyone's talking about this being a very stock specific market at this point until we this volatility volatility, till it persists on the street, we are going to have to take a more stock-specific approach towards the market. And if you have to look at the ban, the stocks that are in the F&O ban for May 30th, you have GMR, Airports and Infra, which has been added into this ban list. Retained in there is Aditya Birla Fashion and Retail, as well as Hindustan Copper and Vodafone Idea. Whereas coming out of that ban list is Biocon, Piramal Enterprise, which will be out of the list for May 30th at least. Now, in terms of fund flow, and this is really interesting because we saw a lot FII and DIIs both buying at least in the past couple of sessions, but yesterday was pretty different, and we saw a huge outflow when it came to at least the FIIs, which went on to sell 5,841.84 crore rupees in equities on May 29, whereas the DIIs tried to do some bit of buying, coming in at 5,233.79 crore rupees. So you can actually see that the tug of war, and we'll be discussing in detail whether that momentum from the DIIs is something that is sustainable, because they are trying to do this heavy lifting for quite some time now. But is that something that can continue? And in fact, Jefferies has put out a note on the same too. We will be discussing all of that and more later in the show. But let me also tell our viewers about the earnings that they need to be looking forward to today. There are about 900 odd companies that will be putting out their numbers, but the important ones from there will be the likes of an Apollo Hospitals, there's Bharat Dynamics, Concord, there's also Godfrey Phillips, Hinduja Global Solutions that will be putting out their numbers, so you can look forward to see the earnings scorecards from this company. But let's discuss and get going and understand where exactly we are on an expiry day, so whether that June series could bring some bit of respite and what are the levels really we could be looking at. And joining me for that now is Chandan Taparia. He's a Senior Vice President of Head of Technical and Derivative Research at Motilal Oswal. Good morning, Chandan. Always great to have you with us here this morning here on Moneycontrol. Chandan, we were talking about, how the Nifty in the past 4 sessions at least has continued that lower, higher, lower formation that you say, and 2 sessions that we've seen this happen. But despite that, those the index is still holding above those key moving averages. So do you think that there is more room, or one needs to be this cautionary approach when it comes to at least the index till we have the big event out of the way? And what are the key support as well as resistance levels that you are tracking for the Nifty first, and then maybe you can give us an insight into the Bank Nifty as well?
Good morning. Thanks for having me. So we have seen a sharp spurt in volatility index. The India VIX is now at 24. So rising volatility is somehow giving the concern and the volatile swings in the market. We have seen a sharp recovery from the lower levels in the entire month, and now some profit booking is visible from higher levels. 4 days back, index made lifetime high at 2310, and now it's down by around 500 points from the higher zone. So we are holding the major support, but profit booking and absence of buying is clearly visible. I believe the major support for the index will directly go to 22,222. For intraday point of view, it may respect 22,500 zone, but as VIX is at 24, so 300, 350 points movement on either side cannot be ruled out. So I'll play the broader range in between 22,222 to 2310 levels. As of now, the bias is buy on decline if someone is looking for positional point of view, but for intraday point of view, let it find some stability near 22,500 zone. Looking at the Bank Nifty index, Bank Nifty started to form lower highs, lower lows from last 2 trading session. However, it is holding well above its 50 DMA, but as of now, the major support goes at 48,000 to 47,777. So I'll keep these 2 levels in mind, not looking for aggressive stand, but looking for some sort of volatile and swings in the market as we are heading towards a key event. Yeah. I believe that one need to look at the option strategy if has to deal with index, but more focus has to be kept in stock specific activity in this market scenario.
Right. So look at an option strategy if you do want to trade in the index, is what Chandan is saying. Chandan, let's talk about the Bank Nifty a little more. You did give us the levels and how, but in yesterday's and even the previous session, banks have been pretty much the drag, and from its highs of on May 27th, where it was at a good high, they're down almost good 1,000 odd points that we've seen this swing for the Bank Nifty. And also the components, we are seeing HDFC Bank also start to perform perform, but then also a lot of pressure coming in there for the other banks like that of an ICICI Bank and the others. How is one supposed to be, reading these components at least for the bank Nifty, and which are the stocks that, one can actually be looking at if they want to take a position here?
So if you look at the bank Nifty index, most of the banking, especially in the private bank, got stuck in a range. Even SBI is having comparatively better structure that also witnessed some cool off from higher levels. So if you ask me, I'll prefer more on the PSU than the private. Near 800, one can accumulate SBI for an upside move towards 850 level. In private bank, I'll go with Axis Bank with the view that major trend is positive and every small decline could be bought. Near 1125, one can accumulate Axis Bank for an upside move towards 1200 levels. So SBI and Axis Bank will be two stocks on my radar with buy on decline stance, with the view that again market will find the buying opportunity after some declines.
Interesting there. And in fact, since we're talking about banks, yesterday we did see S&P Global that came out with its revision on the ratings, and at least 6 Indian banks, that of State Bank of India, HDFC Bank, Axis Bank, ICICI, Kotak Mahindra Bank, as well as Indian Bank. Now these are the ones that they've changed to a positive outlook from a stable that they had before, and this also follows a similar action when it comes to the overall India picture, where the sovereign rating of that triple B minus to that from where it was earlier. S&P has affirmed that triple B minus long term as well as A-3 short term ratings for these banks, and this is pretty much upgraded for the CP for Axis Bank as well as for ICICI Bank, which is a notch higher for both of these. So very interesting here to see, because there's another SBI report that came out on how long it will take for S&P to actually make a rating change for not just the banks that have come now, but for also the overall India picture, whether there is an upgrade that is waiting, and they say that that could perhaps come by FY27. Now the rating agency, remember, yesterday did revise the outlook for India to positive from stable, and they say this is on the back of the robust growth that they are seeing, and also the rising quality of the government spending. So it will be interesting to see how this really pans out, and whether the banks show this kind of momentum, whether this gives them the boost in market, because we're not seeing them actually perform, or rather them being the biggest drags when it comes to the financials, and this whole rally that we're seeing. So that one adding more pressure, we would say, to the markets, and whether this kind of news or this sort of news actually helps these particular banking stocks that we are talking about, that S&P has gone ahead and also revised the ratings for. But right now we'll address market open, and as you can see, we are there about 50 odd points lower for the Nifty. So 22,649 is where we are trading at for the Nifty. Sensex also much in the red, we would say. Sensex coming there almost close to 200 points, or 0.2% of losses there for the Sensex as well. So that one seeing a drop of close to 150 odd points there. 74,300 levels is where we're tracking on the Sensex, whereas the Nifty also there at that 22,600 odd levels. Bank Nifty though, like we were talking about, that one I'm seeing positively there in the green amidst all of the red on the screen. So Bank Nifty, and we just spoke about how these revisions that have come could perhaps be some a glimmer of hope for the banking stocks. So that one is in the green, we would say, at this point. But your broader indices also pretty much trading flat right now. Both the mid cap index, they're seeing about 0.1% lower, whereas the small cap pretty much on that flat line, but we would say that one also holding out a little bit in the green. So let's look at what are those components and who's really contributing then. The gainers and losers now up there on your screens. It'll be interesting to see whether it is the banking pact that is making these changes that are actually helping. There you have it on your screen. You have both Kotak Mahindra Bank as well as SBI from that among your top gainers in trade, close to a percentage gain coming in there. Hindalco continues among your top gainers. Yes, Yesterday there was a news flow to that, but today it is continuing in that list. You also have BPCL after being among the biggest drags yesterday, almost 2% of losses that we saw, some bit of profit booking. Now today in the positive, ICICI Bank continues there. Tata Motors, Axis Bank, Coal India as well among your top gainers. So a lot of those banking components making it to your top gainers list and trading rather in the positive this morning. Tata Steel there, of course, succumbing to pressure, although the results were better than what was expected, but perhaps street not taking that all too well. There is a drop that has come in the bottom line, of course, some 64% drop that is seen in that bottom line number. So we'll talk about that in detail, but Titan also seeing some bit of pressure, and so is Power Grid. So those are your laggards right now. The other ones is JSW Steel as well as Dr. Reddy's Laboratory. Quite interesting, and let's take up Tata Steel for now, because that's the one that is interesting to see what really the numbers have come out. And let me take our viewers through some of those numbers. The net profits are down, like I was saying, by about 64.6%, coming in at 554 versus the 1,566. So that's where you're seeing that 64% drop in the profit. The revenues are also down just by about 6.8% at 58,687, whereas EBITDA is down 8% at 6,600. The margins also have seen just a bit of a change at 11.3% versus 11.5%. But when you actually check this, the EBITDA per ton, that one though has increased. Now the company has also reported an exceptional loss of 594.5 crore rupees, and this versus that exceptional gain that it had shown of 11.6 crore. So these are the news points that perhaps a market is reacting to the numbers. Now we've also seen a whole host of board decisions that are quite on the positive, in fact, that have come out from Tata Steel. They have recommended a dividend of 3.6 rupees per share. It also has approved to issue of debt securities of up to 3,000 crore rupees via NCDs or private placement basis. Now they've also included the infusion of $2.11 billion or approximately 17,407 crore rupees in T Steel Holding PTE for FY25. So this is where they're going to be putting in or pumping in money into, and the conversion of this debt instrument into $565 million or close to 4,661 crore rupees, which is held by the company T Steel Holdings. Now, of course, there are a couple of brokerages that have come out with their reports. Jefferies continues to have a buy call with a target of 200, I beg your pardon, per share, whereas they say that the Q4 EBITDA has risen just by about 5% on a QOQ basis, which is down 9% on a YOY basis. Now, if you look at the standalone EBITDA per ton, that one has fallen by 12%. And it has been pulled down lower by that average selling price. The net debt too is quite flattish at this point, though the company still plans to infuse that 2.1 billion into that overseas holding company, and this will perhaps to repay that existing debt on its offshore entities as well. Interestingly, there's also Morgan Stanley's note on Tata Steel, where they continue to have an equal weight call with a target of 135 rupees per share. Now they say it is a beat on that consolidated EBITDA, which was pretty much led by that better than estimated performance in the domestic as well as overseas business. And like I told you before, this is the fourth quarter where we're seeing the narrowing of losses for that European business. So that perhaps is some bit of respite among all of these numbers. But quickly, Chandan, you come in, tell us how are you reading something like a Tata Steel? It has been among the top gainers all of last week. In fact, most of the metal names were, and for different reasons. But now with this news flow and after the quarterly numbers, how should one be reading Tata Steel?
So like we witnessed some profit booking decline in Tata Steel. If you ask me any metal name, I'll prefer Hindalco over the Tata Steel. But yes, let me talk about the Tata Steel first. It witnessed some profit booking decline, forming a negative price pattern, has been making lower highs, lower lows on the daily scale. But I believe this profit booking may find a hold near 165. So near 165, one can look for some buying interest for a swing towards 175.
Right. Chandan, do stay on with us. We'll address a couple of queries from our viewers as well, and I request them to keep sending them to our live stream, and we'll have Chandan answered. For now, we'll also talk about Cummins India, because that one also came out with its numbers. The net profits are up by about 76.3%, 561.5 crore rupees is where the net profits have come in. The revenues up by about 20% at 2,316 crore rupees. EBITDA is up 66.9% at 544.3 crore rupees. There is a margin also seeing a really good uptick there of 23.5% versus a 17% on a YOY basis. Year 2, the board has approved and recommended the members to consider a final dividend of 20 rupees per share. In fact, let's get Chandan now to answer, because there's a query coming in from Raj who wants to know how should one be viewing Cummins also at this point. Pretty good numbers there.
Yeah, so we have positive view on most of the capital goods, and Cummins is our preferred pick. We have seen a consolidative move in last 8-9 trading session, and it is holding well above 3700 zone. So I believe now higher support is visible at 3750, and with that support, this stock can move towards 4200 zone.
Right, interesting, a way to look at it. Let me also, broaden this discussion and get on board Anshul Saigal as well, because we want to discuss about what Jefferies has come out, and they say that there are 3 reasons why the risk about the domestic funds flowing in might perhaps see a reversal in the rising. Now, they say that the domestic equity inflows during 2024 have been quite staggering at $7 billion a month. Now, that's if you have to look at what has happened all through January to May of 2024. This is to date that we're talking about, which would be twice what they were seeing in the previous highs, or more than 3 times as against last year or a year ago. Now, the brokerage firm also has pointed out to regulatory action on derivatives as a trigger for a reversal if we have to see these kind of, in the fund flows that are coming on right now. Well, on the other hand, you also have FPIs which have been net sellers, now close to 2.7 billion on a year-to-date basis is what has gone out of India. So among this picture that we see, where we are also being warned about whether this 7 billion kind of inflows is sustainable by the DIIs, but you're still not seeing the FIIs flocking in. Anshul, what will be that one trigger that will get this picture corrected for us? Of course, we've been all waiting on the sidelines of the big the election outcome to get out of the way, but do you think post that we are going to see the FIIs flocking back?
Good morning, Stacy. Thanks for having me over. There is one reality in the markets, which is that markets follow earnings. So if earnings see a downtick, then markets will definitely start looking for exits. I mean, individuals who are investing in the markets will look for exits. But if the reverse happens, that is, earnings start looking up, then there will be enhanced interest in the markets. And one of the reasons why India trades at a premium to its emerging market peers, as also to other global markets, is because earnings growth and the width of opportunity in this country is just so robust that it piques interest amongst investors globally, as also in the Indian domestic market. As we are aware, the domestic investor base has enlarged quite significantly from about 4 crore investors to now about 18 crore investors. Of course, what we have seen in recent times is that FIIs have taken monies out of the markets. In fact, they've gone short, which they have covered recently, but they were short for most of the last 6 months. That largely was on account of one large event which is in the works, which is the elections. Uncertainty around that. Secondly, Indian markets were really not in the absolute sense cheap, because they would look at a Japan which was trading at 11-12 times price to earnings, while India was at 20-21 times. That was a heavy mix, and they took some monies off. But given that they're at nearly 11-12 year lows on Indian holdings, And if the same dispensation was to come back and policy continuity was to be built into the markets, then these same institutional investors are likely to come in with a gush, and a lot of money will be expected in the markets. So from a short position or an oversold position at the end of foreign institutional investors today, we could see a turn on its head. That is our assessment.
Right, so interesting. So we'll have to wait for all of these other externalities to play out and perhaps then get a better picture of where we stand in India. Let me also take our viewers through a couple of block deals that we are getting to hear of, and especially this whole week has seen quite a few of them really, big bulk deals that have traded hands. Today we're getting to hear of RR Cable. Now TPG Asia is likely to have sold its entire 5% stake in the company via block deals. This could be worth anywhere close to 1,000 crore rupees, or and coming at a 4 to 5% discount, whereas TPG is likely to sell close to 56.33 lakh shares, and IIFL was the sole broker to this deal, is what we're giving to understand. Another one that is being talked about is KFin Tech. Now there it's General Atlantic Singapore, which is likely to have sold its stake via these block deals. The floor price for this was at 712.5 rupees per share, which is at a 4% discount to its current market price, and the total deal size, including the green shoe option, is that of 1.17 crore shares, or close to 6.8% of equity in KFin Tech. Now the block deal, the block of 833 crores was launched by IIFL Securities, whereas remember General Atlantic holds somewhere around 31.23% of stake in the company that it will continue to hold post this block deal. So its stake still remains at 31.23%, General Atlantic into KFin Tech. Another one that we're giving to hear about is IRB Infra. Here the promoters are likely to have sold 4% of equity worth close to 1,512 crore rupees. The price range for this was anywhere somewhere close to 63 to 72 rupees per share. So three other block deals that we're getting to hear about that took place in early in the block deal window. Quickly coming to Chandan and get his view on a couple of these stocks that we've been talking about, and also get our viewers' queries answered. Chandan, if one has to look at these block deals that we're seeing happen left, right and center, is it safe for one to be looking at them, or one should be more stock specific? If you to take KFin Tech particularly in today's session, how is one to be looking at them, and is there room for this particular, and how are the charts looking for KFin Tech?
So chart structure is slightly turning lower. Stock started to see profit booking decline. It has been making lower tops, lower bottom. Just couple of days back, it hit the high of 822, and now it's near 700 marks. We have seen selling pressure with volumes drifting below 50-day marks. So I think let it stable. Some more profit booking may be seen, which can take the stock towards 650, 640 zone. So expecting some more profit booking, as it has given a breakdown and taken pause after the positive stance of last couple of weeks. Right.
So we're seeing that counter really, 5% lower on the back of this news also, and perhaps that profit booking continuing post this news flow. Chandan, let's get a couple of queries answered. Then Mohit Anand wants to know whether he should buy Coal India as well as Zydus at the current market price, and is this the right time you would suggest, and also give him the target and stop loss that you would have for both of these. So first go with Coal India.
Yeah, so Mohit asked about Coal India and Zydus. So first, if I reply on the Coal India, major trend is positive. We witnessed some profit booking decline, but there is a buying opportunity. He can buy this counter near 470, 475 and look for an upside move towards 520. So buy on decline is advisable here. Looking at Zydus Life, a couple of days back, it made the new lifetime high at 1172, and after that profit booking is clearly visible. Near 1000 he can accumulate for an upside move towards 1150, 1200. So both the stocks are good, but immediate structure is slightly negative. So we'll advise to go with buy on decline, and given the precise level to get a right entry and ride the swings in the counter.
Right. So a buy on decline is what he's suggesting for both these counters. I hope that answers your query. Anshul, let me come to you then and ask you about PSU stocks. Now that's very interesting because if you have to go by what reports are suggesting, they have soared to nearly 7-year highs. We are saying market capitalization constituting to 17% of the listed universe. So that's where you're looking at PSUs really be that showstopper. Do you think this is only because till in the run up to the elections, or do you think there are particular pockets within the PSU space that you find interesting, and what would those be?
Stacy, if you look at the PSUs in the previous capex cycle, which was 2003 to say 2010, you would notice that PSUs had a humongous rally in that phase. That was on account of the gross fixed capital formation in the country going up, and hence demand for these companies also picking up quite significantly. Thereafter, we did see a slowdown in capital formation in the country, and most of these PSUs, they suffered as a result. Their valuations also collapsed. Even though in the last, say, 2 odd years, these PSUs, in fact, say the last 1 year, PSUs have rallied. But if you look at valuations of PSUs on a price to book basis, price to earnings basis, you will notice that from previous highs, PSUs are still trading at about half the valuations. So that was the level of impact on the downside that these PSUs witnessed in that phase of down cycle between 2011 to 2020. Some of that has gotten corrected, but there is room for that to correct even further. PSUs have become very efficient in how they are operating, much more efficient than they used to be. They've cut a lot of slab. That is leading to some tailwinds on earnings, as also the environment is helping them. So when you look at banks are seeing tailwinds on demand. Many mining companies are seeing the same. Many of these companies are actually monopolies, hence they are witnessing significant tailwinds in their growth. And all of this combined, it looks like PSU rally is not yet over. There is room for this to go further.
Right. So Anshul says that there is room further, and there will be certain pockets within this pack that will be interesting to be looking out for. Chandan, to you then another query that we'll take up. Rupak Mehta wants to know if one has to choose between HDFC Life and SBI Life, which one should one be looking at from a 1 to 2 year perspective?
If I look at the chart structure, both the charts are slightly down on the lower time frame. But if you ask me for bigger time horizon, then both are almost same. If I look at the structure, short-term profit booking might be seen, but I'll go with HDFC Life with the view that already it witnessed profit booking from higher levels. Multiple supports are near 535, 540. So near to those zone, he can accumulate for an upside move to a 650.
Well, interesting. They're both pretty similar, and you can, choose your pick then. Until let's shift focus towards oil marketing companies. Now, we did see them come under some bit of pressure as we're seeing crude oil prices, go back onto that trajectory. It had come down to those 80 levels. Now we're back to somewhere around 84. There is all of the geopolitical tensions that continue to rage on. But the likes of an, BPCL today, it's among your gainers, but yesterday it did slip by 2%. There's also news flow coming in that Saudi Arabia is likely to launch a $10 billion worth share sale in Aramco, and this will perhaps happen over the weekend, and we could see change in oil prices. Then how much of that will have a bearing on what we're seeing here in India? We are among the biggest importers of oil, so how will that change our scenario here?
Stacy, in oil, really there has been very limited investment over the last say 7 to 10 years, mainly because of these ESG norms which have come into play, and most companies are looking for environmentally energy sources which are environmentally positive and not going for oil investments. As a result, capacities in oil are scarce. This will trigger, given that demand is picking up for oil, this will trigger over the next, say, 5-10 years, not only in India but globally, a significant investment cycle in oil is our judgment, and as a result, companies which are involved in that oil infrastructure space should do very well. Upstream companies, because of scarcity of oil, should see tailwinds in both volumes as also in pricing, and so those should do well. On oil marketing companies, there are a lot of moving parts, so you will have to keep those as trading bets rather than long-term holds. Oil as a whole is a space which will continue to have the market's interest also because of geopolitical issues, etc. So, you will have to look at this space as an investment opportunity, but of course, in segments which have more, stable sort of growth dynamics rather than moving parts within that segment.
Right, interesting. Quickly, Anshul, also, what do you think the markets are going to be in the next innings? If you look at the rest of FY25, put aside the outcome of our general elections and also what we can or cannot hear from the Fed, and that rate cut being, something that is still hanging in limbo. What would be the sectors you think, putting these aside, what would be the sectors that you think will be where one should be looking at for FY25?
$1 million question, Stacy, and since you're putting me on the mat, let me answer this as candidly as I can. So, if you ask me, for the next year, markets will do nothing. They will remain. I mean, of course, we have a big event, so depending on the event, there will be some moves up or down. In all likelihood, up. But over a year, I see that the markets will remain about flat. But there will be a lot of money made in select segments of the markets. We still find there are segments in the market which are very reasonably priced and where tailwinds and demand are only picking up. For instance, capital goods is a space where you can find stock-specific opportunities. We do believe that this country is at the cusp of a long-term capex cycle, and we have only just entered that capex cycle, say in the last 1 year. And private capex is likely to pick up from here to the next 3, 5, 10 years. And if that were to happen, capital goods companies will be big beneficiaries, manufacturing companies will be big beneficiaries, core economy-linked companies will be beneficiaries of this trend. We also believe that cyclicals, financials, particularly the corporate lenders and also certain NBFCs are trading at very attractive valuations. There will be tailwinds there. Rural economy, which has been in the doldrums over the last, say, 1 to 2 years, is likely to turn in the second half of the current financial year and thereafter. And there, at a time when the markets are at all-time highs, you're seeing stocks which are half from their all-time highs. So we find opportunity there as well. So many opportunities in the markets. It's just that for the discerning investor, there will be money made. If you're a broad-based portfolio manager, then it will be a tough year because markets will unlikely go anywhere.
Right. So rather dull. But what are the kind of returns? If I have to still, bring that question back to you, what are we going to see those, 15-20% kind of returns, at least on the Nifty? Are you looking at something like that, or that's too far-fetched, do you think?
15-20 is too far-fetched. I don't think that is the kind of return one will see in the current financial year. Although I could be well wrong. I don't believe that one should be taking market calls, but 15-20 is far-fetched.
Right.
Having said that, I should tell you that this is a phase. I have been a professional fund manager and now I'm an individual investor. This phase is highly skewed in favor of an individual investor because you can take those sector bets where you see tailwinds in the next 1 year. You don't need to be diversified. You can be concentrated in those sectors. And so for such, sort of discerning investors, knowledgeable investors, you could well make 15-20% or even more in the current year.
Well, quite interestingly and nicely put there. Chandan, your final word, any picks or recommendations you have for our viewers today? What is on your radar?
So what I noticed that your Nifty is finding pressure, but Bank Nifty is holding the gains due to the buying in selective heavyweights name. If you ask me the stocks, I'll focus on Jubilant Food with the view that major trend has turned positive, holding well above the hurdle of 500 marks. High rise, high lows is clearly visible. So with support of 507, one can look for an upside move towards 550. One can also look at the Motherson Samvardhan. Major trend is positive. A small decline could be bought with support of 142. We are looking for an upside move towards 155. One can also look at the power name, including Power Finance Corporation (PFC). Here one can buy with support of 500 to target towards 530. So these are the couple of names where one need to focus to navigate the volatility, or just to be in the safer side to reduce the volatile swings of the market.
And interesting picks there. PFC Motherson also is something that, a couple of brokerages have come out with positive reports on that one post its earnings. So those will be interesting counters to track. Well, let me thank both my guests, Anshul Saigal as well as Chandan Taparia. Thank you so much, gentlemen, for giving us your time, helping our viewers with their queries and also helping them navigate this kind of volatile market environment that we're currently sitting in. And hopefully the June series will perhaps be something different over the, that we can talk about at least once those exit polls are out of the way and we have a result, or a formative result, come June 4th. But thank you so much, gentlemen, and to all our viewers. Well, we're completely out of time, so we have to wrap here. So it's a goodbye from me and the entire team that puts this piece together. Thank you so much for tuning in every morning and watching us. But do send us your feedback in the comments section below, and follow us on the link that comes at the bottom of your screen. Do also, for rest of your updates, come back to Moneycontrol.com as well as the Money Control app.